This is Joe with FX Daily Breakout, and I'm coming with a short video today about how candlesticks are formed in the market and how they correspond to the daily, 4-hour, and hour time frames. Um, Basically, I want to start off and let you know every candlestick that's formed is on a daily chart. That one candlestick is what was the market movement in that day. So if you have a red candlestick, that would be a bearish candlestick. So this big red candlestick would be bearish movement, basically meaning that price was moving down, and a green candlestick corresponds to price moving up in the market. So when a candlestick is formed, you have a high, well, you have an open, a high, a low, and then a close. I'm gonna draw that out for you real quick. So this is a red candlestick corresponding to the, it was a bearish movement in the market during that day. Have a wick at the top and a wick at the bottom. And we're going to mark these up so you can get a better idea of how this goes. So here would be your open. This will be your high. This would be your low or your close. And this would be your open. Now I mark these so you can see how this works. Alright, so this would be your high. This would be your open. This would be the close. And this would be the low. So if you was to move down in price and will move down on a lower time frame, say an hour chart, price would look completely different. You will see more swings, swing highs and swing lows. And I'll draw the example for what I mean. So if price opened up in the day, it will open here. You'll have a swing up, swing down, swing up to make the high, maybe a break of structure, some movement inside of the candlestick. Then say a close. It hit the where make the low, and then come back up and close within that 24 hours. And that's what price would look like on maybe an hour chart. So I would want to mark that and let you know that this is a lower time frame. Okay, I'm gonna go and give you an example. I'm gonna find a candlestick on this daily chart and give you example and go down to a lower time frame and show you how price moves. This seemed like a pretty good candlestick to show from, so I'll put a line here, that way I can go down to the lower time frame and see exactly where price moved. And right now I'm just marking the highs, the opens, the highs, the lows, and the close on that candlestick. Go down to the hour chart, and there we go. That's where we find it. So depending on where this um, opened, more than likely it was within these candlesticks here. As you see, price started, came up, it went down, moved up, came back down, swing up, made a low, and then came and closed in this area. So that gives you a little bit of example. And even if you want to break down to a lower time frame like the 15-minute chart, you would notice a lot more of price action. Let's see, this might take a bit to find real quick. But we'll find it. There we go. So like I said, this is an example of one day on a lower time frame on a 15-minute chart. So right here you have the open, the high. I'm gonna go and change this stuff, but and then you have the low and the close. So as you see how price moves from a higher time frame into a lower time frame. So I hope this was a little helpful. If you have any comments or questions, just comment down below, and I'll try to get back to you as soon as possible. Have a great day.